Hi there, welcome to Hedera Wyckoff Technical Analysis session. So thanks for your feedback. I have adjusted the audio input mic basically. Hopefully this time, like starting today, it gets better. Let me know in the comments. So let's get into Hedera. Basically it seems like the Hedera price is dropping outside of the upward channel, but this week's candlestick, there's still like around 3 days left. There's still a chance for the bulls to push the price back into the channel, so let's not declare defeat too early, but still we have to look at what's happening. This is the weekly chart, and last week we have drawn this pink line over here. Basically I said there is a chance that the price fall outside of the upward channel, and then this bottom edge of the channel becomes the resistance line for the future price actions, because there is a cross over here, the cross between the white dash line and the orange key level of about 21 cents. So that level over there, this 21 cents I was talking about, so this level here, or this triangle over here, basically I was saying if the price drops outside of the upward channel, the breakout would still happen within October, because that week is the first week of November, or like it's crossing 2 weeks, so the first day and second day of November falls under the week of October 27th. So I was saying the breakout would happen by then if the price drops outside of the channel. Now it has kind of stepping into the first step of that scenario. Not that it's absolutely going to happen that way. I'm going to keep this line over there and see in a week or two, when we come back near the end of October, whether that's going to happen in such a way. That's only one of the scenarios. I already mentioned the other scenario when I said there's still 3 days left for this week's candle, is for the price to push back within this upward channel box. And if that happens, there is another triangle over there, this yellow line crossing the bottom edge of the upward channel box. So that's also another time point I mentioned. By middle of this month, a breakout would happen, and it's either break outside of the box or it shoots up, passes this yellow intermediate resistance level, which for the past 2 weeks the price hasn't been able to stay above this line, actually 3 weeks including the week of September 22nd. So this line is extended from what we have on the left hand side, this LPSY, the peak of the LPSY, plus these two tail and head of the period where the price drops from the second test to the sign of weakness. And as of this moment, in the big picture, this definitely has confirmed the LPSY over there. If I change it to a line chart, you see these little peaks along the way, and I'm still keeping these two percentages, just that Uptrend may be having a slightly lower chance now that if it falls outside of the upward channel. So this white line will become the resistance line. So if it doesn't break out like the pink line has drawn, it will eventually come down to challenge the red key level of 17 cents 50, and eventually the white line over here, much like what happened back in late June and early April. So I might as well extend this resistance line, so by the time if the price really drops to this level, we know these time points are over there for potential breakout scenarios. So essentially Uptrend and sign of weakness are the next two. I wouldn't say Uptrend for now, let's say second test. If it goes higher, then it's an Uptrend. So basically another test towards the light blue key level of 33 cents is of lower chance compared to the price coming down to find support at around a sign of weakness level. However, this may not be the only case, so it can happen in such a way that it's not even a sign of weakness. It can go all the way to a preliminary support. Oh, actually, that's another excuse me, other color. So let me borrow it over here. So what I'm talking about is if we reference what happened back in 2022, that's we've got 3 LPSYs after the upwards of the distribution, and eventually that sharp drop right at around the level where we are now, somewhere between the yellow key level of 25 cents and the orange key level of 21 cents. The price fell straight for almost 7 to 8 consecutive weeks with just a little bit of a pause, and then eventually reaching the buying climax within 10 weeks. So that was what happened back in June 2022 all the way it's April 2022 all the way into June 2022. So if it really drops from the similar level, then that's going to repeat what happened back in 2022. But again, that's only one other possible scenario. That's when people start to move their money to other assets and get ready for the bull run of those assets, basically. Maybe crypto or some other assets that are positioned to rise in price when the central banks of big countries around the world starting to lower interest rates. So let's get to the daily chart. I just want to quickly switch on this Bollinger Band counter squeeze indicator because the squeeze is happening right now again. So when that happens, you know subsequently there will be price wings. So previously we had that squeeze back in mid-August to late August, and then there was a bit of a swing. Now we are entering another squeeze, and this time, because of where we are now in terms of the Wyckoff distribution cycle, and that's for weekly, for daily is actually inside an accumulation cycle. So previously we talked about, hey, would there be an SOS? It seems it happened right here on October 6th. So just a few days after our last session, and then it came down for a second test. Both happened already. So that's why I put in early tags because I know in a daily chart, within a week, a couple of stages could happen in the Wyckoff cycle. Very key over here is what happened just yesterday, or just basically half an hour ago. So this candle closed about 34 minutes ago, not yet 34 minutes actually. It closed below this uptrend upward channel box, and now it's trying to climb back. You see this white candle trying to go up, right? I just want to adjust this box a little because I notice it's not covering the wicks of the candlesticks. So last time we have adjusted this, just not close enough because the top wasn't touching, and now the wicks over here is outside still. So just a little bit, because if I enlarge it, like widen the box, everything will go inside. So currently it's basically staying on the edge of the box. So it's a really tricky situation. However, the wick has touched the orange key level of 21 cents, meaning this key level is still providing certain support, and whether or not the bulls are able to push the price back into this upward channel box is a big test for the coming 2 to 3 weeks, because I already mentioned in the beginning there are 2 time points over here. One at around October 30th, the other is around November 3rd or 4th, but the breakout will happen before those 2 dates if the price either stays within this triangle or the one above. Those are the respective breakout time when the price in the next 8 to 10 days, if they still trade within those triangles. Obviously, there is one over here, another one that's around October 20th, even earlier than the other two. Just that because the current price is outside of this wedge. So as of this moment, it's not something we need to consider until this candle really closes within or above this blue line again. So earlier just now it was dropping outside of the box, so the bulls and the bears are fighting really hard on this one currently. So looking at these stages, so after sign of strength and second test, what else? Is it going to have another test or a spring? Definitely that can happen. So this second test over here may not be over yet. So sometimes we have to put these together, because eventually if this fails and comes down to test the orange key level again and fail to find sufficient support, that's when the scenario where the price comes down to seek a lower level support would happen. So if you look to the left, meaning in the history, near term history, a possible intermediate support level would be around 19 cents 50 roughly, because there was a sign of strength over there and an automatic reaction right there. So if I draw a line cutting across these bunch of candlesticks, that's where the intermediate support would be. So remember always, these are levels, not just one price point. Meaning, if I draw the line currently at around 19 cents 80, that's that doesn't mean 19 cents 80 is the exact point. It's a range, so somewhere around 19 cents 80 would the price would find support over there. So it can be a little bit higher or a little bit lower, but that's a very close region where the price would bounce if it really falls below the orange key level. So that's the use or the meaning of these levels. When I say the test and spring for this current accumulation cycle, meaning it's, if we look at what happened, well, it's very, probably I don't have it in the daily chart, but in the weekly you will see, if you're new to the Wyckoff pattern, so there are tests that falls way lower than the selling climax, and the terminology calls that a spring. So that's why we've got this test or spring, meaning the price may come even further down, lower than the selling climax we had back in the 1st of September. So that's where one of the scenario where the price would go if it really comes down over here. So for now, let me check what kind of, we've got 60% over this side, so this has to align. Unfortunately, not a good news for the bulls. 40% if it really comes back to retest the yellow resistance line. That's 40% chance. Much like what the pink line is indicating. That pink line was drawn, I think, last session, a week ago. Hopefully not earlier than that. I don't think I can draw something that early. So this sign of strength over here, the volume is pretty impressive. However, the subsequent days just doesn't follow. So some people might have bought the dip around, because there was a dual support over there, the orange key level and this blue bottom edge basically the support from the upward channel box. So that's why there was quite a bit of a bounce until it hits close to the dual resistance, one the yellow dash line and then the other the white dash line. That's why subsequently the next day or next 2 days, because the one in the middle basically was people taking breath, and then eventually yesterday it completely fell outside of the uptrend channel box and hits the orange key level. So that's Hedera. It's a big uncertainty ahead because it seems to try to break a trend that has started way back in the first quarter this year. So after half a year, probably it's time for people to change course, and if the big guys, the composite man or the whales, decide to once again push it to a second test, that's still possible, but it depends on whether it goes within this channel box or is it starting a new channel that sits under the bottom edge of the box. Because if it sits under the bottom edge, that means the time frame will be even further down. It's indicating sometime around the end of first quarter, if the price really comes outside of the channel box and start a new uptrend. If it stays within, that's more ideal because it can go up pretty quickly. Obviously, if there are sudden crazy news, it can break either of these two scenarios, but that's less likely. So be careful what's coming next for Hedera, because like I said, it may be getting near the end of the distribution, and this dip over here may get us to somewhere near the low point we had back in early April and late June. So hopefully not deeper than that. Thanks for joining me. See you in the next session.